The Fed keeps trying to talk rates higher, but will the bond market listen? Hey, it's Eric Osnes here from Homebridge Financial Home Mortgage with my weekly update on mortgage rates and the economy for the week ending February 10th, 2023. Well, a week ago, we saw a surprising surge in January jobs, up 517,000 jobs. Bonds reacted negatively to the news, pushing rates higher. But the data, as it was analyzed, revealed that the methodology uh, of the reported changed, adding significant seasonal adjustments. Taking out all those adjustments, we actually lost jobs for the month. After the market started analyzing that data more deeply, bonds rallied, pushing mortgage rates a little bit lower. That's when the Fed stepped in. They sprang to action. By Wednesday, no fewer than 6 Federal Reserve governors made hawkish speeches forecasting their intention to continue rising interest rates. This has been a pattern that we've seen over and over again as time goes on. Every time mortgage rates rally and start to head lower, the Fed jumps in to try to talk those rates back up. Well, this time they succeeded. Mortgage rates for the week ended up slightly higher, not significantly, but still slightly higher. Here's the national averages for conventional 30-year fixed rate mortgages. 30-year fixed rate conventional, 6.5%. That's up 0.31 from a week ago. 15-year fixed rates, 5.62%. That's up about 0.32 as well. 30-year fixed rate FHA and VA, 5.88 to 5.92, up about 0.26 to 0.27 from a week ago. 30-year fixed rate jumbos, 6.1%. Those are up about 0.35 from a week ago. 5/1 ARMs, 6.68, up 0.3. I don't, again, put a lot of emphasis on the 5/1 because we have lots of other adjustable rate options that are all over the place, but typically significantly lower. All right, moving on. The 5 stages of interest rate grief. Anyone who has lost something they love has gone through the 5 stages of grief: denial, anger, bargaining, depression, and finally acceptance. Many of you, myself included, went through this last year when we lost our dearly beloved 3% mortgage rate. And I'm not kidding about that. I was on the receiving end of many calls from clients reflecting all of these emotions, and I've seen the malaise manifest itself in many of you over the past year. I'm not going to buy now. I missed it. It's never going to work again. Or I'm going to wait for the market to crash and then I'll buy. Of course, that hasn't happened. Home prices were up about almost 6% for the year last year, and we're forecasting something similar for this year. But fortunately, by now, more and more of you are transitioning into that acceptance stage. Purchase activity has increased recently as buyers realize that 3% rate is a thing of the past. It's time to move on. Inventory is up too a little bit. There's some good homes to look at. Sellers are more willing than ever to negotiate the price and even pay some closing costs. And we have several really creative loan options available to take some of that initial payment shock away, including temporary buy downs where you temporarily lower your interest rate and wait for mortgage rates to drift lower. They will. They'll head down as the economy slows. We also have some very safe adjustable rates where we might fix the rate for 5 years, 7 years, or 10 years before that rate ever adjusts, giving you some time again to wait out the next interest rate cycle. So what's the best thing to do? Well, it's to get educated and learn about what your options are. And what's the best way to do that? Take one of my home buying workshops. I've got classes forming now for a couple coming up. Saturday, March 4th in Tacoma, Washington. That runs from 9:30 a.m. to 2:30 p.m. Saturday, April 29th in West Seattle. That one runs also from 9:30 a.m. to 2:30 p.m. This home buying workshop is a free class. It's sponsored by the Washington State Housing Finance Commission. It also satisfies the education requirements for many special financing programs, including zero down programs and first-time buyer programs. If you're interested, reserve your space. Just give me a call. You can call me or email me. Call me 206-915-3742. That's 206-915-ERIC. You can email me, Eric at ericismybanker.com. And or look for me on social media. You can message me that way as well. Well, that's all I've got for this week. Hope that you have a great weekend. And if I can help you work through those final stages of interest rate grief, you be sure to let me know. Have a great weekend, everyone.